Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello, and welcome to another edition of the Grain Feed, brought to you by EverAg. This is your weekly news feed for all things grain and all things feed. Each week, we bring you updates on the markets with unique perspectives from an amazing team of analysts with the intention of helping dairy and livestock producers manage their risk. I'm your host, Jim Matthews, reporting from the home office in Chicago, reporting from his home office and Chiefs Shrine, Director of Feed Procurement, Mr. Jake Kingsley, and making her first appearance on the Grain Feed and making her debut to the media world as an official EverAg colleague, Grain Market Intelligence Director, Shelby Myers. Team, how are we today?
Pretty good this morning, Jim. A little icy down here, but otherwise doing all right. Still got electricity.
That's good. That's a victory. Ice, but also electricity. Shelby, how are we?
I think we're just extra chilly and cheering too loud for the local team.
That's good. That's good. A little chilly, but overdoing it on the cheers. But that's okay. So, Shelby, we're very excited to have you here on the Grain Feed. Also very excited to have you at EverAg. I believe it's just been a couple weeks now since you started with us. So would you mind giving the viewers a quick introduction?
Absolutely. I'm so excited to be here. I don't normally sound like this, so hopefully you'll have me back and we can do a real trial run. But I am Shelby Myers. I joined the EverAg team earlier in January. I come from 7 years of working on ag policy issues for Farm Bureau. I spent 4 years at Indiana Farm Bureau, lobbying at the state level, and then the last 3 years as an in-house economist for the American Farm Bureau. I covered issues from crop markets to farm policy to sustainability, and recently moved home to Indiana, just south of Purdue University, where I did my bachelor's and master's degree. Go Boilers! My husband and I are back on the farm as well. We raise corn, soybeans, beef cattle, and then sweet corn for a local distillery.
Awesome. That all sounds great. We're excited to have that experience with us here and to have you along for the ride at EverAg. Before we turn it to you for the markets, Paige, if we could kindly timestamp the broadcast. It's Thursday morning. Grain and feed markets are trading a little mixed at the board this morning. What seemed like a broader pullback yesterday, Wednesday, was ultimately a continued uptrend in our markets as of late. Nice recoveries late for both old and new crop corn yesterday afternoon. We've pulled back slightly this morning, back below 680 again on both March and May. December still maintaining its sub $6 territory. November beans made their way back above 1360, trying to push 1370 as we record this morning. And we're noting the December and November pricing on corn and beans to focus on that bean corn ratio, which we might discuss with Shelby here in a minute. Soybean meal, that stubborn little byproduct of ours, resisting those market liquidations of yesterday, having nice recoveries, and now today establishing new highs as the protein markets await condition and yield updates from Argentina, which of course has been grabbing the headlines as of late with their weather. Shelby, speaking of weather, we are officially now in the month of February. As you noted, a little bit chilly up here in the Midwest, recording on Groundhog Day. And the viewers are wondering if the bulls are going to see their shadow, let the markets ease up a little bit, or continue to find that courage over the next coming months and have a similar run to February of 2022. So looking back on February 2022 and the events that occurred after, would you mind refreshing us on what drove those markets 1 year ago and forward?
So when we look back at 2022 and everything that it was for agriculture, this is a good time to reflect. It's kind of a quiet period, or usually is. We've just kind of wrapped up all of the reports that is the data dump, if you will, that happened in January. We've got time to understand what's going on there, as well as look ahead to 2023. And I think that's a great place to start. Looking at 2022, record net farm income was primarily focused on crop receipts. We had a huge drop off in government payments due to the sunset of things like market facilitation payments, the coronavirus food assistance program, and other ad hoc disaster support that really led for farmers and ranchers to have crop and livestock cash receipts that are going to be at record highs. Compared to 2021, dairy cash revenues are going to be up 38%. Corn's going to be up 28%, and those oil crops like soybeans are going to be up 29%. And I really point out that it's important that we're focusing that net farm incomes on the cash receipts because those government programs are going to be under scrutiny this year. 2023 is when everybody's going to be talking about the farm bill and farm policy. The 2018 farm bill expires later this year. And so that's the front and center item for what's going on and the issues to be talked about. And overall, I think it's substantial that we say these cash revenues are going to be up because we have $6 corn and beans in the teens, as we like to say. And for all of that, we can't ignore market volatility. And we focus a lot on this time of year. But remember, last year at the end of February is when Russia invaded Ukraine and everything went crazy in the markets. And so these then and now perspectives are going to be really important. This quiet time could easily be disrupted with just one geopolitical or global change. And so we can't assume that this kind of price volatility isn't here to stay. I would say buckle up if I could be so crass.
Good deal, Shelby. Thank you for that. As you said, February usually can be a quiet time of the year, but as we reflected back on a year ago is when, you noted things really did ramp up thanks to the conflict in the Black Sea. And you also noted that maybe built-in volatility and support, from that conflict and everything that has happened since, and how the beans in the teens has become somewhat normal feeling to us. Meal with that $400 mark has become normal. Corn above $6. Things that previously, historically, not numbers we are used to watching. So the weeks, months, potentially year ahead, what are you seeing for the markets?
I think we have to dive a little bit into why those prices have taken off. And looking at the corn balance sheet for 2022, we're obviously going to take into consideration USDA's changes in the January WASDE. When you pull back 1.6 million harvested acres and adjust yields up a bushel per acre, you just wiped off 200 million bushels from production. And that's going to be significant, even more so when demand has fallen to its lowest estimate since 2015. And so that overall demand side of this 22 crop really looks a lot like 2015. And paying attention to some of those market normalities that we saw back then and abnormalities too, coming into the fact that we have so much geopolitical conflict that's influencing the global markets, it's really important that we're using some comparative years of what is normal, if you would, to see where we could go forward. On the soybean balance sheet too, I think 2022 soybean demand is really thriving on that domestic crush use and hopes to continue that, right, with the expansion of renewable diesel and some of those things. But soybean exports in particular are really on the backs of China. And if China continues to stay in the mix to buy soybeans, unlike they were in 2018, 2019, that soybean export number will continue to be lower than it has been in recent years. So we really have to watch China's purchases of soybeans. Overall, the other thing we can't ignore for 2022, and I know we'll dive deeper into this, is what the other side of a farmer's income statement looks like on expenses. But these prices right now, driven by primarily the demand side and then a few adjustments on the supply side, are really going to carry us into what this new crop could look like.
Good deal, Shelby. And that the soybean numbers in terms of both exports and having to depend on Chinese purchases, but also that domestic crush use, which we have also addressed here on the show in recent weeks, and really impacting the byproducts of beans and how it affects dairy and livestock producers on the meal front. And then for the corn front, for those same farmers, maybe China even stepping out of the game more and more for U.S. corn purchases and how that's been affecting pricing. So all very crucial for us to watch. So thank you for that, Shelby. Let's turn it back to Jake now to hit that feed commentary. We're all hungry for it. Jake, What's the story in the feed markets this morning?
So I think the interesting thing we're seeing out here, as Shelby has talked about, is maybe this demand picture for the coming crop is starting to have a little bit of an effect on feed values, at least basis wise. We talked about this before. So old crop basis is fairly stagnant. It's not necessarily run much higher. It doesn't feel like it has a whole lot of room to break lower. So we're probably stuck in the cycle we've been in until at least later this summer. Maybe July, August, September, we start to see some numbers break down. If there's a little more grain left in the bins than was anticipated, and we've got a good crop coming our way. But where we're really starting to see some interesting movement is out there on the new crop curve. We're seeing offers earlier than we would normally see, particularly in the western part of the US, some of these more rail dependent markets where you have some of the bigger players in the ABCs of grain that have assets in the Midwest and then also have assets at the other end of the rail lines there in the western feed markets. They're coming out with some new crop clock offers that have been out in January. I mean, last year we couldn't hardly get somebody to give you a number until April or so. So they're coming out early, and we're seeing numbers that like Texas Panhandle, where it's usually running somewhere in the 130 over basis for processed corn, and something like a 25 to 35 over soybean meal offer for the clock period. They're at 185, 190 on corn and 65, 75 ish on soybean meal. So still stronger than normal, but better than you could get today. I mean, today in Texas, ground corn is running at 240, 245 FOB basis. And then soybean meal, I think, is still, it's probably about where you could get a new crop clock contract, somewhere in the 60s to low 70s type of range. And then you take a look at places further west, like Arizona and California, where we're seeing new crop clock offers somewhere in the 230 over range for corn. There's not really a good number out there for soybean meal quite yet. We have seen canola somewhere in the 20 unders. So old crop California number is 270-ish, maybe 260 in a few spots. FOB, normal's 175. I think a target this year is probably something close to 200. I was honestly surprised to see a 230 floating around on corn out there already. But I think folks are realizing that maybe the demand picture is not so glamorous, and if we get a crop, we could see these basis numbers slide a little bit. Ultimately, the farmer can still snag some $6-something corn and some $13-14 beans earlier in the year than they usually ever have. And so some of these feed vendors are seeing that and trying to get a little bit on the books a little bit early. I think we can see some of these basis numbers work lower and more in favor of the feed buyer as we put a crop together. If we get some decent planting conditions and good growing conditions to start the season, but at the same time, it's hard to discourage somebody from owning these types of numbers if it's something that a dairy thinks they can make profitable against some milk. Now, I know the milk market's kind of soured on us here over the last couple of weeks, but I think there's opportunity out there now if you have to have it, and I think there's more opportunity ahead if we just get a little bit of good weather over the next couple of months. So
good deal, Jake. Thank you for that, and appreciate your insights today. I'm going to ask you both. We're recording today, Thursday the 2nd. We will not record again until after the next WASDE report. It kind of snuck up on us, I think, right? So I'm going to ask you, borrowing from Phil and Kathleen, bold predictions for next week's WASDE report. Jake, bold prediction.
So I wonder if they come in and they trim the Argentine corn crop by another like 2 million metric tons or so.
Okay.
With the dry weather we've seen. So I got a feeling that's going to happen. But otherwise, I think it's probably going to be pretty quiet on the U.S. front.
Okay. Quiet on the U.S. front. RG corn down 2 million tons.
Maybe another bump to the Brazilian bean crop.
Another bump to Brazil beans. 1 million tons?
Let's call it 0.7.
0.7.
Hey, that's better than nothing this time of year, I think.
Fair. That's fair. Shelby, bold predictions. Next week's WASDE.
I like Jake's take on South America, but I don't agree on the U.S. side. I think we're going to take a look at exports both on corn and soybeans again, and maybe even lower those. I just haven't seen the buying and purchasing that I'd love to see this time of year, but I could be wrong too.
Reduce corn and bean exports?
Well,
Bold prediction.
I'm double checking my math here.
It's got to be bold. Just do it.
Yeah. I'd say just trimming a couple million bushels off both, but yeah, we're gonna trim them both.
Okay. My bold prediction: we don't touch U.S. export numbers next week. We don't even touch them. Bold prediction. Excellent work today. Thank you to you both. Thank you to Shelby for joining the show on your first appearance. Great to have you. Excited to have you on board here at EverAg. We'd also like to thank Corey and the EverAg Insights crew for their support. Thank you to Paige for production magic. And thank you to the viewers for watching the grain feed. Contact information is on the screen. We greatly appreciate your feedback. That's all for today. We'll see you next time on the grain feed.